Companies issue shares on the stock market to raise capital to expand their business. If you know it's low availability but high demand in the future, it will boost price. Like that's what the crypto guru is talking about right now. The crypto demand will only grow, but availability will only get lower, you feel me? Market dynamics, economic conditions, and changes to economic policy tends to impact the overall supply of stocks. This sometimes makes stocks go bearish right here. Like you start with $1, it takes $1. So like a lot of traders throw their whole net worth into trading when really you're supposed to invest first and then 20% or less of your net worth go to trading. This is the easiest way to save $500K. All you need is $15 with a monthly contribution of $45 a month. My account got $9,999,999,999.99 in it. Investing is an effective way to have your money work for you and build wealth. But I'm so diversified between all of these because I read The Holy Grail of Investing by Tony Robbins. And some of these was the things he was like, you need to diversify into. All right, what's up YouTube? Hey, Disciplined Diamond Hands back with another video. I'm not a financial advisor, but I do have disciplined diamond hands, and I will give y'all a lot of value today in under 10 minutes, hopefully. Today, what we're going to cover is the basics. What is the stock market? Why should you invest? How are stocks priced? And the difference between investors versus traders. So first thing first, let's get into this slideshow. First thing first is the market always recovers from every pullback, so don't let the news fearmonger you out of your position because the market will always be more valuable in the future. Basics of the stock market by Disciplined Diamond Hands. What is the stock market? The stock market is a broad term for the network of exchanges and over-the-counter venues where investors buy and sell shares in publicly traded companies through top online brokerage platforms. What are brokerage platforms? Platforms like Robinhood, Charge Squad, Fidelity, Interactive Broker, or Wanda, things like that. These are two of the stock exchanges in the US. I'm only read the stuff that's underlined because I'm from the South. So I talk slow and I probably read slower. So to keep this video under 10 minutes and give y'all a lot of value, I just gotta read what's underlined. Companies issue shares on the stock market to raise capital to expand their business. This is like the #1 reason stocks go public. Why do stocks go public? Instead of going in debt, they can just raise money through investors. Investors may buy shares to receive dividends, vote in corporate elections, or sell shares at a higher price. Why invest? Investing is an effective way to have your money work for you and build wealth. An individual investment goals depend on their income, age, and risk tolerance. Okay, so like my age, I'm below 25, so I'm high risk. The older you are, you typically, the less risk you are, the more bonds you want to hold and more safe investments you want. But I'm young, I can compound risky investments, and honestly, I'm so diversified. If a risky investment, that's where risk management comes in. Like my last video, I discussed risk management. A lot of my investments may be considered risky, but I'm so diversified between all of these because I read The Holy Grail of Investing by Tony Robbins. And some of these was the things he was like, you need to diversify into. You know, the top billionaires have 7 things that they're invested into that don't follow each other. They're uncorrelated. And once I read that, I started looking into all these assets like he was talking about in the book. And I started diversifying, and diversifying is key, I ain't gonna lie. How are stocks priced? The law of supply and demand is a theory that seeks to explain the relationship between the availability and desire for a product, such as security and its price. Typically, low availability and high demand boost the price of an item, and high availability and low demand reduces its price. So if you know something will have a demand boost in the future, that will boost price. If you know it's low availability but high demand in the future, it will boost price. Like that's what the crypto guru is talking about right now. The crypto demand will only grow, but availability will only get lower, you feel me? Economic data, interest rates, and corporate results influence demand for stocks. These are things that cause stocks to go bullish. Market dynamics, economic conditions, and changes to economic policy tends to impact the overall supply of stocks. This sometimes makes stocks go bearish right here. Both supply and demand for stocks tend to amp up in response to initial public offerings, spin-offs, or the issue of new shares. Investors versus traders. Investing is the safest thing you can do. Before you start being a trader, you want to be an investor. A lot of things where traders go wrong is they try to over leverage too much without having a solid game plan. But the thing is with investing, you start with $1 and you build your account. Like you start with $1, it takes $1. So when you're investing, you learning how to risk manage with $1 up to whatever you build to. But when you're trading, it's like, let me take this $100 and flip it. And if it go wrong, you losing everything. Like a lot of traders throw their whole net worth into trading when really you're supposed to invest first, and then 20% or less of your net worth go to trading, you feel me? Because then if 20% or less of your net worth go to trading, and every trade, you're not risking your whole account, so you can't blow your money on one trade, then you'll be able to take multiple trades. Because the thing is with trading is you gotta take losses to be able to win, because you gotta journal your losses to be able to win. Versus investing, you just buying whole great companies for forever. An investor is typically distinct from a trader. An investor puts capital to use for long-term gain, while a trader seeks to generate short-term profits by buying and selling securities over and over again. And this is how you buy stocks. For the long run, we're looking at UPS for the long run. I got a YouTube video discussing UPS, how to buy low, sell high, the fundamentals I like about them. I went over their earnings report in some videos, and the videos will be recommended at the end. But this is Robinhood. This is my account. It got $9,999,999,999.99 in it. Buying power. Add buying power first thing first. Add $3. Add $5. Type in UPS or type in a blue chip company, value company, or ETF of your favor. I discuss ETF investing. It's like 10 different sectors that ETFs are involved in, and I discussed that. But UPS, any stock you want to buy, once it pop up, hit trade. Once it pop up, hit buy, and you can buy any amount you want. Start with $1 a week, 10 a week. But this is why you should invest. Investing is the easiest way to save $500K. Why? Well, if you start with $15, if you invest $45 a month with an interest rate of 15% for 35 years, you'll have over $500,000 saved up or invested up. The principal would be only $19,000, and total interest is this crazy amount, right? This is the easiest way to save $500K. All you need is $15 with a monthly contribution of $45 a month. $45 a month, interest rate 15% over 35 years will make you $500K plus. This is the easiest way to do it. Invest in VU, SCHD for diversification. Invest in VU and SCHD for diversification and passive income. Then invest in undervalued companies with profitable futures within those two ETFs. But that's all I really got for y'all today, the basic of the stock market. I'm going to be going over more, the basics of technical analysis next. I appreciate y'all for watching, man. Stay tuned for more videos, daily drops.